Trading Truths, Bite-Sized Wisdom, a Trader's Handy Handbook. There are truths in every field, principles that hold steady no matter the noise, the trends, or the passing of time. Trading is no different. In this handbook, you'll find 150 bite-sized trading truths, hard-earned lessons and distilled wisdom that every serious trader, whether seasoned or just starting out, should carry in their toolkit. These truths are not just tips. They are mental anchors, ideas forged from real-world experience, meant to expand your confidence, sharpen your awareness, and reinforce your discipline as you navigate the ever-changing markets. Because trading isn't just about strategy. It's about psychology, patience, and personal evolution. The more you internalize these truths, the more you'll start to see the market for what it is. Not a mystery to be cracked, but a system to be understood and respected. And in time, with consistency and focus, these truths can lead you toward what so many chase but few attain: real financial freedom. There's something incredibly powerful about understanding the inner workings of your craft and knowing how to stay grounded when others lose their way. That's the freedom that comes from truth. So here they are, a collection of trading truths designed to guide you, challenge you, and inspire you. Let's begin. 1. The market calls the shots. The market isn't fair or unfair. It just is. 2. Look, listen, and learn. There are clues everywhere. 3. Never make speculation a part-time hobby unless you are happy to donate funds to the professionals. 4. Trade with discipline, not impulsiveness. Quality over quantity. 5. If you are serious about trading, make it your full-time focus. You wouldn't expect a successful surgeon to learn his trade part-time. 6. Markets confound. Expect the unexpected. Markets don't always follow logic. They have a way of surprising even the most experienced. Markets often behave unpredictably. 7. When in doubt, let the trend lead when conditions allow. Go with the flow of the market. That's where momentum lives. 8. The mark of a good trader is how he deals with his losses. 9. Like nature, there are no straight lines in markets. 10. When in doubt, don't trade. 11. The trading day does not stop when the market closes. 12. Trading success in the present so rarely ensures future success. 13. Trading is psychology, yours and everyone else's. 14. Create a trading plan for every market condition. 15. The market is different but nearly the same, one day to the next. 16. Common sense does play a part in markets, normally after they are closed. 17. Skip the market close and you'll be guessing at the open. 18. Avoid hesitation. Trade enough to grow. Find the balance. Don't trade too little. 19. Over the long run, markets tend to trend upward. Zoom out. And the market's long-term trajectory is almost always bullish. 20. Speculation can be fun for those that don't take it seriously. However, it will never be rewarding. 21. Trading performance is influenced by the methods a trader uses to learn. 22. A trader who reads through his daily trading log at the end of the trading session relives the market again. He doubles his experience of the market compared to those who do not and makes money twice as quickly. 23. While a 100% loss streak is possible, a 100% win rate is highly unlikely. You can lose every time. That's the risk. Winning every time, that's the illusion. 24. Never risk more than 1% to 2% of your account on a single trade. Keep your risks small. One trade shouldn't make or break you. Risk only a tiny slice, like 1% to 2% to survive the long game. 25. Investors are bigger gamblers than speculators. They expect their investments to take care of themselves. 26. Avoid trading on tips. They're often recycled and unreliable. Trading on tips? That's someone else's leftovers. Tips are usually secondhand. Trust your own analysis. 27. Rumors are the distorted echoes of truth. It is the orphaned cousin of real news, close in form, distant in fact. 28. There is no such thing as a good long-term investment. Conditions always change, and when they do, a good long-term investment can fall 99% in value. 29. In the markets, hope is a silent killer. Ditch hope, trust your plan instead. When hope creeps in, logic checks out. 30. Protect your profits. Don't let them slip into losses. Win small if you must, but don't lose what you've already earned. A profit isn't real until you take it. 31. At its core, the market is just a game of probabilities. Treat the market like a game, but play it with discipline. Just make sure you know the rules. 32. Even the best trading strategy has a flaw. 9 times out of 10, that flaw is unknown until it's too late. 33. The market doesn't care about your needs, only your decisions. Don't expect the market to provide, it rewards discipline, not entitlement. 34. If you're off to a rough start, don't dig the hole deeper. Stop trading for the day. When the market tells you you're out of sync, listen, take the hint. Some days, the best trade is no trade. 35. Risk-taking is a core part of a trader's role. It comes with the territory. To trade is to embrace risk. It's the price of opportunity. No risk, no trade. It's that simple. 36. Market wisdom is earned through learning, and ignoring it comes at a cost. You can study the market's lessons, but you must never dismiss them. 37. Poorly placed stops are magnets for volatility. Be strategic with stop placement. Predictable stops can be vulnerable. 38. Only trade when there's a clear reason. Never out of boredom. Don't hit buy or sell just to feel busy. Wait for the right setup. 39. Enter trades with patience, but exit with conviction, decisive exits. Sneak in, strike out. 40. Higher risk means the possibility of larger gains as well as more significant losses. If you want bigger profits, be ready for bigger losses too. 41. Always verify before trusting someone else's market view. Listen to commentary, but trade on your own analysis. 42. Be firm when closing a trade. Don't wait for a miracle recovery. Hesitation at the close can turn a small loss into a bigger one. 43. In trading, the patterns repeat. What feels new in trading is often just history in disguise. 44. Timing turns preparation into profit. Your edge lies not just in what you trade, but when. 45. There is always a signal at the start of any race. Learn the signals. 46. Don't try to trade everything. You'll end up mastering nothing. Keep your watch list tight. Quality beats quantity. 47. Fast cash isn't a strategy, it's a setup for loss. Easy money comes fast and goes even faster. Profits can be addictive, but they're never dependable. 48. Trade the build-up, not the aftermath. Markets move on anticipation, capitalize on expectations. Jump in on the hype, get out before reality hits. Buy the rumor, sell the news. 49. Losses are part of the process. They're a business expense. You'll take hits. That's the price of staying in the game. Losing is part of the deal. Get used to it. 50. Don't trade more than 3 stocks at the same time. More than 3 trades at once can stretch your focus too thin. 51. In the market, there's always a silent observer. Institutions watch behavior. Don't be predictable. 52. Not all advice is unbiased. Some tips are disguised self-interest. If they're pushing a stock, chances are they want to dump it. 53. Trust the price action. It speaks louder than opinions. Let the market guide your decisions, not your emotions. 54. Don't hesitate to lock in profits, but always respect your stop loss. Fear losses more than missed profits. Protect your capital first. 55. Aim to maximize gains while minimizing losses. Win big, lose small. That's the goal. 56. Pay attention to the subtle signs the market sends. Success comes from hearing the market's whispers, not its noise. 57. Don't bet more on a bad hand. Raise the stakes on a good one. If it's sinking, don't add weight. If it's rising, ride it higher. 58. Stay emotionally neutral, detach from outcomes. Consistency matters more than results. Indifference to outcome is the strength of a focused trader. 59. Profits and losses are just data. Your edge lies in execution. 60. Be patient. The right moment to trade will arrive sooner than you think. 61. Think like a human. Trade like a machine. 62. Don't accept what you don't understand. 63. Don't get mad at the market. It doesn't care. 64. You can make money through luck, but not every day. 65. Don't expect to win every day. 66. If a new trader lives and breathes the markets, he will make money within 3 months. 67. Use charts to confirm a move, but don't rely on them to make decisions. 68. The mark of a good trader is how he deals with his losses. 69. Wait for a majority of your safety indicators to align before trading. Don't pull the trigger unless at least 3 of your 5 safety rules are satisfied. 70. Ride the momentum but exit ahead of the crowd. Follow collective energy, not collective exits. 71. Lasting success comes through perseverance, not shortcuts. Easy money is fleeting. Real gains are earned through discipline. 72. Know when to take a calculated risk and when to step aside. Sometimes you trade, sometimes you chill. Know the difference. 73. After consecutive wins, reduce your position size to manage risk. Don't get cocky. Take the foot off the gas and trade lighter. 74. Don't jump in or out just because of price tags. Consider the bigger picture. Cheap doesn't always mean a good buy, and expensive doesn't always mean sell. 75. Analyze the market environment thoroughly before entering a trade. Don't trade blind. Understand the market first. 76. Trust your analysis and commit once your due diligence is complete. Stand by your conviction when all your research aligns. 77. Maximize gains by letting winners grow and limiting losses fast. Let your winners run wild and chop your losers fast. 78. Respect the market. It has survived longer than any trader. 79. Retail traders rarely shake the market. If you are, check your size. 80. Know how to recognize and follow smart money. 81. Don't sit on the simulated trading market for longer than 3 weeks. It will take 6 weeks to unlearn it. 82. New traders who don't live and breathe the markets will be claiming Social Security benefits within 12 weeks of starting. 83. Put in the groundwork, study your information sources, and revisit your trades. 84. Know your trading strategy. 85. Learn to recognize the other participants in your market. They leave footprints like you. 86. The more you lose, the smaller your trades should be. 87. Don't follow the guy next to you. He'll be out before you are in. 88. Be jealous of your capital, guard it carefully. 89. Trading can appear to be deceptively easy. Don't believe it. 90. Keep in good health, sleep well. 91. Be ready to modify your approach. The market is like a river with tides and currents. 92. Never hedge when you should be out of the market. 93. Never trade when you are drunk. The market loves a drinker. 94. If you are right, back your trades with all your conviction. 95. If the market starts to bore you, it's time for a vacation. 96. Losing trades have a habit of sticking together. Winners tend to like their own company. 97. A good trade feels good from the start, a bad trade, bad. 98. Know when to take a loss. 99. Make sure you are sitting at your desk at least 20 minutes before the market opens. 100. If you are late for the open, don't trade until you have spent at least an hour catching up. 101. Understand who moves your market. 102. Never put your stops on or next to a big number, for example, 4,000. Big round numbers are stop magnets. Place yours a safe distance away. 103. If trading does not excite you, consider pursuing a different path. Success in trading demands dedication. Be passionate about trading or leave and do something else. 104. Take time to practice. Top-class athletes do not race every day. 105. If a trader does not review his market activity at the end of every day, it will take him twice as long to reach the standard of one that does. 106. Never trade when you are hungry or tired. You can be distracted by strong natural urges. 107. A trade will have its moment. When that moment is over, kill it. 108. Practice is the cornerstone of expertise because it multiplies experience. 109. Traders experience emotional conflict when they depart from their trading plans. 110. Trading is a performance discipline that responds directly to training. 111. Traders must get used to making decisions with incomplete information. 112. Good traders don't accept defeat lightly. 113. A trader will only improve if he pushes himself into uncomfortable territory. 114. Training translates trading talent into skills. 115. Build a toolbox of trading strategies. 116. Commit fully or gradually fail. 117. Be judge and jury on your own trades but spare yourself the gallows. 118. Give yourself a break. Work with yourself rather than beating yourself up over losses. 119. Try and learn something new about trading every day. 120. Don't let small losses create big problems. 121. When you have taken a good profit, be satisfied. Never re-enter the market to better it. 122. If the best sources of information cost you, pay. They will pay for themselves 100 times over. 123. Winning in trading demands sustaining enhanced learning processes. 124. A lot happens when you're not watching. 125. Watch out for the wrong turn. The market leads many a trader down a dead end. 126. Time wasted trading the wrong stock will ruin your chances of picking the right stock in the short term. 127. If a stock has had a significant positive run, don't be surprised if it gets tired. 128. If you place a trade for certain reasons and those reasons don't change, don't cancel your trade. 129. Keep a journal of your past successes and failures. You never know when the same conditions may arise. 130. Don't trust a sudden uptrend in a bear market. It can change direction in an instant. 131. Pride will ruin you. Humility will quietly support you. 132. A trading idea has a limited lifespan. Like an option, it runs out of theta. 133. You can forget, ignore, or renounce your trading performance, but you can't hide it. 134. Don't treat the market like an intellectual challenge. It's not a conundrum. 135. Theorists are theorists because they aren't traders. Good traders are rarely theorists because they rely on fact and knowledge. 136. Missing the close means missing key clues about tomorrow's open. When you walk away before the bell, you might walk into confusion at the open. 137. If you arrive at your desk after the market opens, don't expect to make money in the first half an hour other than by luck. 138. Risk the profits, not the losses. 139th. An important market move will not end in a day. 140. If you double your money, draw half of your profit and place it in reserve. 141. Skillful traders get their reputation from the market's storms and tempests. 142. Think successful thoughts when you do think about trading. 143. Don't let trade costs interfere with your trading decisions. 144. If you have made a good trading decision, you are likely to show a profit from the start. 145. Sometimes markets are so strong you have to go with them. 146. If you have a long-term winning trade, don't wait until the last moment to take your profit. Exit swiftly and leave a little of your profit for the market. 147. The big players can be wrong, but they have a softer cushion to hide it under. 148. When you're winning, trade like a winner. 149. Ask yourself a question before you sleep. The morning will have your answer. 150. Self-criticism is meant to be constructive. Be kind. After all, you have to live with yourself. Summary. You've just heard 150 truths. Short but powerful insights forged from real trading experience. Some were reminders, others revelations. All of them were meant to sharpen your edge, strengthen your discipline, and help you trade with more confidence and less noise. But here's the real truth. Knowing the path and walking it are two very different things. Wisdom means little without action. So the challenge and the opportunity now rests with you. Use what you've learned, keep these truths close, revisit them, reflect on them. Let them guide your decisions when the market tempts you to stray. Because in the end, trading isn't about chasing every move. It's about mastering yourself. And mastery, like profit, doesn't come all at once. It's built, one truth, one trade, one decision at a time. So trade with purpose, stay curious, stay disciplined, and above all, stay in the game. This isn't the end. It's just the beginning. Keep learning, keep growing, and let your truth as a trader take shape. One bite-sized insight at a time.